Hey, so I wanted to share this concept of how you can save 58% interest on your mortgage over the life of the loan. And so this video is really geared for somebody looking to get debt free faster or quicker. But I really wanted to just share this concept of a lot of times people I talk to are focused on getting the lowest interest rate possible, which isn't a bad thing to go for. But really, what we should be focusing on is how to save the most money as possible, how to borrow a loan for the least amount of interest paid over time, right? And so I want to share this concept of the standard 30-year mortgage that most Americans take out when they're buying homes in the United States versus a 20-year option. I'm going to start with a refinance, but we'll also talk about doing a 20-year if you purchase today. And so right now, if we look at mortgage rates in America, you'll see right now, according to Mortgage News Daily, around a 7.05%. And obviously, we've seen rates go up the last few years. But let's talk about what we can control right now, which is how to structure a home buying decision the best way possible to save as much money as possible. Now, when we look at the data of what Fannie Mae, Mortgage Bankers Association, Wells Fargo, and the National Association of Realtors are saying as we head into next year, where will rates go? And it is looking like it's lower based off the data into the fives, right? So I want to share this concept here on the screen. Give me one second. And we pull up this strategy of a $750,000 home, putting a 25% down payment. Somebody buying right now, the monthly mortgage, just the mortgage, not including taxes or insurance or anything, is $3,742 versus if we can refinance or restructure that mortgage in the future to a 5% interest rate, that would yield the same monthly payment basically with a 2% rate reduction on a 20-year mortgage. And this is what happens after you buy it. With a lot of my clients are closing today with 30-year mortgages, but we're going to work to restructure them to 20-year mortgages. When you start to look at the vast difference of the interest over 30 years, you go from paying $786,000 of interest over the life of the loan to only $329,000 of interest over the life of the loan. That's a 58% drop in total interest paid. And even over a 10-year period, that's $136,000 of interest saved at the same monthly payment. And so when you're working with a mortgage lender or mortgage planner, it's not about getting the loan done. It's how do we structure and manage that mortgage after closing to make sure you're saving as much money as possible, which is what we provide for our clients. Now, the other thing I wanted to share with you is, well, what if we even bought today with a 20-year mortgage, right? Instead of waiting for the refinance to happen, what if we were to say, let's buy today in the same exact scenario with a 20-year mortgage? Now, a 20-year mortgage usually has a little bit lower of a rate than a 30-year mortgage just because of the way the bond market works and the coupons are trading. And so if you look at this, you could get a $750,000 home for $450 more per month. And if we look at the interest savings, it's very massive, right? You're still saving over $300,000 of interest on a 20-year mortgage buying today, not even having to wait for the refinance, and a guaranteed $60,000 over 10 years, right? And so there's still things you can do today. And so I look at when I'm doing budgeting work with my clients, a lot of the clients I talk to, and honestly, myself included, I'll find myself spending $451 on Uber Eats every month, or I'll find myself, maybe on a car payment or, different types of things that we're spending money on that we don't really even think about. In a mortgage, if you're really looking at it, we can really save a ton of interest by not sticking with the 30-year mortgage in the long run. Now, I will put a disclaimer out there that a 30-year mortgage is a great wealth building vehicle if you are renting a property out, like if you want to write off the mortgage interest on your taxes and other things like that. But this is really geared for a primary resident homeowner who is looking to get debt free quicker and pay that mortgage down. And the higher rate environment we're in today doesn't have to feel that way or be that way if we can really look at your entire financial picture and get a plan in place to not borrow for 30 years, but to borrow for less time. So I hope this was helpful. If you have any questions, feel free to reach out. Any feedback, happy to go through that. And I look forward to finishing this year strong with everybody. Take care.